to order with Drew and me here, and I'll turn it over to Leslie to review the financial statements, please.
Okay, great. So we've given you an unmodified opinion on the financial statements, and of course that's what you want. That's a clean opinion, so to speak, highest level of assurance you can get. Rita has taken some of the financial statements and put them into Excel so that we can compare last year to this year and then have some explanations. So I'll let Rita go through what she's prepared, and then we'll take a look at a couple of footnotes too.
Okay. Can everyone see my screen?
Yep.
Yes.
Yep.
Okay.
Is it big enough for everybody?
Yep.
Okay.
I can make it bigger. So as Leslie mentioned, I took the financial report and just put it into Excel. So we started with the statement of financial position, and I just broke it out so you can see the dollar change from last year to this year along with the percent change. So your cash did increase as you would want it to due to receiving more funds. Your accounts receivable increased about 23.5% from last year. And that was largely due to timing, especially with the ESPRI grant, but also the WIA dislocated workers and the WIA admin grants.
And I'll just interrupt for a minute. So Rita just put the percent change for the larger ticket items. She didn't do it for every single line.
Yep. So overall, your current assets, your assets in general did increase. Your liabilities, your AP was very small. Comp apps stayed relatively consistent. But then your unearned grant revenue did increase 169%, which again relates to the increase in your grants for the WIA dislocated workers and your WIA adult program. So that's funds you received, but you have not yet completed the progress, the requirements to actually earn those. So we test that. Then thing that sticks out the most is your net assets. It decreased 101.5%. So you went from a $26,000 positive net asset to a deficit of $388. That is due to the disallowed costs during the year. What?
Primarily,
yes. There was some other stuff. You had increases in other expenses. But so with that, there is a footnote that we'll go over that's in the report that addresses this deficit of net assets.
Rita, question, and when I looked at the note, I didn't see the amount of the disallowed expenses in that note 10. Is that amount disclosed somewhere else in the report?
Yes, it's on the statement of functional expenses. There's a line for disallowed costs.
Okay, I see it there. All right, could you add that to note 10 also?
Yep.
Thank you.
All right. So then we have, so that's your statement of financial position. Next is your statement of activities. Your revenue, it's grant revenue, it's grant income. You did see an increase due to receiving more grants and more revenue during the year, which is always good. You always want to receive more money. Your expenses, I did it two different ways. This is how it's presented in the report. So you have your program services and your administrative services. Your program services increased due to shifting of like costs from administrative to program based on actual time and just more programs. And that's also why your administrative cost expenses decreased. And then, so we did it this way. And then my next page is going to be by line item. But you'll see that there was a change in net asset. It went from having more revenue over expenses to having more expenses over revenue during the current year, which is your result in your net deficit during the current year. So then your functional expenses, now I took and did it based on line item from year to year. So you could see each line item, not just program service versus administrative, it's total. So your salaries increased 24% and your payroll taxes and fringe benefits increased 20%. That's due to increase in rates during the year, increase in employees during the year. They correlate with each other. Your next biggest increase is your supplies. It went up about 216%, and it's due to spending more on supplies during the year, along with having to cover those costs that somewhat you may have split with REDAC in the past when you guys were in the same building. You could share the costs. Now you're taking on all your own costs of supplies. You'll notice contracted.
Rita, I was just going to say, and plus the move, I think,
Yep.
necessitated more supplies.
Your contracted.
I didn't notice you made any comment on professional fees. Did I miss something there? Because that almost doubled.
It did. So we can talk about it. I was doing more changes that like had big dollar values too. But professional fees, it's kind of the same thing with your move and everything to get set up, different services that you had to offer. There was just an increase in those expenses during the year.
I suspect there were some legal fees in there, Nancy, as well, that we traditionally don't have a lot of legal fees, and that would fall into professional fees as well.
And some
can we break that out just a little bit more so that, because that, other than our program costs, it's one of our larger costs. So let's have a little more breakdown, please.
Of the professional fees? Okay.
Yeah.
Are you saying, Nancy, that you want
more description
in the statements themselves? Oh, in the description? Or are you saying
in the statement of functional expenses in that 27,000? So if like 8,000 of it is legal fees, let's have that separate. And if 10,000 is moving expense, I'm not saying anything below, you know, anything that's, I'm looking through, we've got some things that are on there at $72 and $54. So I'm not sure what else might be in there. Is the audit fee in there?
Yes.
Okay, so let's separate out legal and audit and then other.
Okay.
Okay.
Because that when I'm looking at the statement of functional expenses, on page 6, it says it was, okay. It's interesting because it switches too. For program services in 2018, it was 5,000, and admin, it was 10. And then in 2019, it was 27,000 for program services and 29,889 for admin. So a switch in.
Nancy, the reason for that is SACNA did not want all to go to admin as we had done in the past. She said the programs need to start picking that up. So, and the
interesting.
reason, yeah, it changes every year. The reason for that is because she didn't think that our other non-WIOA programs were picking up enough. So if we were going to charge it to our other non-WIOA programs, she said we needed to charge it to our programs.
That is so weird.
Yeah.
'Cause those would typically be clearly indirect costs, so. But
Exactly.
anyway, they have their own world. But it would help us to see at least audit, legal, and any other large amounts in there, please.
Okay.
So you'll see that your contracted training services increased 51%. So it doubled. And a lot of that is due to the shift in trainings during the year. Because if you also look, your youth service, your youth training subcontracted decreased almost 97% because you brought your youth training in-house. So then you shifted some of those costs to other training programs or areas during the year. So all your trainings relate to each other due to bringing your youth services in-house and shifting the costs elsewhere to other trainings. Your tuition and incidentals increased during the year. Tuition costs increased, and if you're covering those, it's going to increase, and you had more participants that took advantage of those options. As I had mentioned, your customized training and on-the-job training, there was an increase because there was more of a need for it, and you shifted those costs from the youth training over. Your one-stop center costs decreased about 23%. And if I remember correctly, it's because you closed one of the one-stop centers during the year. So you have one less center that you have to had expenses for. And then your disallowed cost increase, which is largely, it's part of that due to the timing of your ESPRI grant and just having those disallowed amounts.
All right, any questions on those financial statements? Then maybe we could go over to the report itself and the footnotes.
Yep.
So, Rita, you can just scroll down until we get to, I think it was note 7, was it? Oh, 4, sorry. So just wanted to show you that there's detail, the grants receivable and what's in the unearned grant receivable. So you can see the different components of that. And then, keep going. This note I wanted to highlight because this is new this year. So during the year, we implemented ASU 2016-14. And as part of that, a couple things changed. If you noticed on the statement of net position, where we used to have of course, you don't really have restricted net assets, but we used to call it restricted or unrestricted net assets. And now there's a new terminology. It's called net assets with or without donor restrictions. There's also this new footnote that's required, liquidity and availability of resources. And what it's showing you is the liquid assets that you have, which is pretty much all your assets are that way. And so it's showing cash and grants receivable. So these are things that can be turned and can be used to pay off current liabilities within a year. As you can see, there are no restricted net assets to deduct from that. What this statement doesn't allow you to do, because we had done some research on it because it didn't really make sense to me, is to show you what your current liabilities are. So this says that you have $94,000 of assets available. If you look at the balance sheet, you've got a little over $94,000 in current liabilities. So that's not showing in this footnote. And when we first implemented the standard, we tried to put that in there, and then we had to do some research and we had to take it out. So you need to look at the whole big picture, the balance sheet as well as this footnote. And then note 10, deficit net assets, is just highlighting what we've talked about as far as that 388 deficit now. And we're saying in our conversation with Patty and Dan that you've gotten some support from local governments to kind of help mitigate the effect of any future deficits. So hopefully that will help you, with your cash flow as well. And then we put note 11. It's a standard footnote that we're putting in all of our reports. It's the coronavirus. Who knows? It might have the opposite effect for you because as we were talking with Dan and Patty, it might make more revenue for you. So it's just hard to know how things are going to fall out just all over the universe at the moment. So that basically is the financial statement in a nutshell. Any questions on the statements themselves? Okay, then I'll turn to the letters. I won't ask you to necessarily go rifling through your letters, but the communication letter, oh, you've got it there anyway. Okay, so the communication letter, mainly this is required by auditing standards. So there are certain things that we need to communicate to you, and that has to do with your accounting practices. Now, we did have a statement in here that we implemented the new ASU, so that's in here this year that isn't usually there. Then accounting estimates, your estimates for the allocation of functional expenses as well as compensated absences are basically the only estimates that you really have in your financial statements. And these are based on various factors, the allocation of time and the expenses that follow, your salary expenses, that sort of thing. And then comp abs is just, the leave time times your rates. Then we talk about footnote disclosures that we want to highlight to you. I realized that we didn't go back after we added the deficit net asset footnote, so I think we want to put note 10 in here as well. So we'll make that change. There were no difficulties, thank you. And I want to thank Patty and Dan and everyone that helped us during the audit. Thank you for that. Corrected and uncorrected misstatements. Every year we do we help with the closing entries for the accounts receivable, the grants receivable, and the deferred revenue, as well as the compensated absences. So we've attached a schedule that shows what those adjustments were. And no disagreements with management. Management representations, as you know, management signs a very lengthy letter for us, attesting to everything that they've given us and that there's nothing that would affect our opinion that has not been shared with us. No other audit findings or issues. And then finally, that last paragraph is just talking about our responsibility for supplementary information, which in your case is a schedule of expenditures of federal awards. We didn't look at I didn't think to look at the single audit section of the report when we were there, but we're still carrying that one comment about the reconciliation that you've been working with over the last several years. And until we get closer to that, we'll leave that comment in there. Thanks, Rita. Any questions on the communication letter? Then the comment letter really is just talking about new standards that are coming next year. Now, what's happened since we put this letter together is that the FASB has come out and has delayed some of the standards. So this first one, revenue with from contracts with customers, has actually been delayed a year. So now it's not effective until June 2021. And leases as well has been delayed. So now that one will not be effective until June 30, 2022. So that's a little bit of a ways out. The next one, however, contributions received and contributions made, that has not been delayed. And what this one does is you have to determine, like for your grants, for instance, is it a contribution or is it an exchange transaction? And if it's considered an exchange transaction if the grantor is receiving commensurate value for those services that they're paying for. And public good is not considered commensurate value. So I think in your case, we'd have to say that pretty much they're contributions. However, they do have conditions with them that you have to meet before you can recognize the revenue. So I don't anticipate that there should be much of a change in actually how you're reporting. And you can adopt early for the revenue for the contracts with customers. However, I don't see that really affecting you either. So, you know, we might want to just implement them both together.
So you just mentioned that there might not be much of a change for us. That does sort of leave open the window that there is going to be some level of change. Is that going to be primarily, you know, a few little things that Patty can largely do, or do I need to bring in, you know, program staff to kind of help give the data? What level of resource intensity?
I really don't see it changing unless you interpret Nancy, maybe you've had time to think about this, unless you interpret things a little differently than I am. But based on the conditions, you know, I don't think we want to recognize like the whole grant at one time or anything like that.
Okay.
I don't think it's going to have much of an impact at all because we should not recognize the whole grant. I actually think this whole rule, probably shouldn't say it since I'm being recorded, but I think it's not useful for our type of organization.
I agree. I do agree with you on that.
Okay. All right.
Okay, so that is the comment letter. I will make the change. Well, actually, we'll change the comment letter to reflect the new dates, the new implementation dates for those standards. And we'll change the communication letter to add note 10. We're going to change note 10 to include the amount of the disallowed costs. And then I think the last thing was splitting out those professional services into greater detail. Does that sound good?
So in terms of next steps, then my thought would be that we present this as an agenda item at our full board meeting at the end of June, or near the end of June. Nancy and Drew as audit committee members. So we'll want to have kind of everything finalized, if at all possible, and the final prints done, or drafts, I guess. I don't know how much paper there's going to be involved this year, but get the finals done so that you all can present this information to the board. I'll make sure there's an agenda item on that meeting. Do we feel that we want or need or could benefit or should invite the Intero folks to that meeting to present as well, or do we have enough clarity and from this meeting to be able to just move that forward without them attending?
Well, since it's a Zoom meeting, I think it helps if they come to just I think maybe the report we just had without the discussion of the new accounting principles
Okay.
would be useful. Rather than the audit committee reporting that. And I think the overall discussion and the way it was presented was great. And except for, I wouldn't really talk about the revenue, the
Yeah.
accounting principle for the general board. Drew, what do you think?
No, that's fine with me. I think that's a good concept that we could use for the meeting.
Okay.
And I'll just mention that the comment letter talks about new standards, but they, and then just leave it at that.
Yeah.
So in terms of planning for that agenda and that presentation, do you, Leslie, want to have you or your team do you want me to reach out and kind of conference you in at the time so you don't have to sit through the rest of the meeting? Do you want to sit through the rest of the meeting? Nancy, do you want me to try and move this to like the first agenda item so they can join and then leave? I'm sure Jack would do that if you want to go that route.
Yeah, let's do it toward the end. So if there are, I hate to say it this way, but it's an easy thing. Once we have quorum established, if anybody has any questions and they have to leave, they can always follow up and get it. So we could put it at the end if Leslie can be flexible, and then we could just contact her when we're ready. How's that sound?
Yeah, I'm sure that'll work.
So we'll practice at our end, Leslie, but you'll need to let me know who you want to ask to join. But I believe on the functionality here, I can just sort of have you in the queue as having accepted your attendance to the meeting, and then I can just ask you to join. So you'll just kind of have to be near your screen to see that invitation and accept at that time.
What's the date of that meeting, Dan?
Pop quiz to Dan. Let me see.
25th.
June 25th?
Yes.
What time?
The meeting should run from 8 to 9. We are going to have some good strategy conversations. So my thought is, Nancy, probably do this right. We usually would want to end that because I can't control how long that strategy conversation around business services, the business services report and some of our customer accounts that I want to kind of chat. I don't know how long it's going to take. So if we put this on right before we go into that.
Well, with that, why don't we do it first? And we shouldn't take any more than 10 to 15 minutes. Would that work, Leslie?
So you're saying, wait, do us first then?
Yeah, do it first so you don't have to sit and wait for us.
That's fine. Yep.
So the meeting will convene 8, or given how things play, probably 8:03, 8:05, somewhere in there. And then we'll do the conflict and call to order, and then I'll schedule this to be the first. So maybe 8:05, 8:07, somewhere in that time frame, and I'll book you a 15-minute block. And then if you finish sooner, great. If not, you'll have a solid 15 minutes on the agenda.
Okay, great.
So by 8:20, you should be done.
One thing I just want to mention, with the extension for the single audit, you just need to come up with some rationale of why you needed to extend due to COVID-19. So if you could just write up a little blurb as to how the impact created that your need to extend, that's required.
Yeah, I will say that we can very quickly have Patty get that to you, because the reality is, under COVID-19 being a non-essential business, our staff were working remotely, and our GMS system can only be functioned out of our actual office. So there's been tremendous delays in getting staff in there, and limited amount of time that staff can actually be in that location. And that slowed down a lot of our financial functions up until, well, actually still tends to have some delays as well. So Patty can draft that up.
We just need to have it documented and in our work papers, that's all.
Yep.
So it doesn't have to be anything elaborate, just something quick and,
Yep.
A couple sentences.
Okay, so Patty, can you get that as quickly as possible, please?
All right, thank you. So we'll start the final QC process on our end. That usually takes a few days just to get through another review and everything that we have to do.
So Melissa, what is the date that you plan to send out the meeting materials to the board members for review?
the stuff that I send out to the board before the
Yep.
meetings?
Yep.
Well, the meeting is June 25th, so usually I send out the materials a couple days before.
Okay.
So the 25th is on what day?
That's a Thursday,
Thursday.
so
Thursday. So I would say early that week that all the materials should be sent out.
We'll have it way before then.
Okay.
No issue.
Yeah.
All right. Anything else? Well, thank you all
Really?
very much for your time.
Well, really good to see you, Leslie. Tell the rest of
Yeah,
your
good to see
team
you too.
back in, and when you talk to them that I say hi, please.
I will. Next time I see him, I haven't seen anybody for like 6 weeks.
Yeah.
It's Zoom and Teams, which has been a lifesaver, I'll tell you. You couldn't function
That's
without
sure.
Teams. All right. Well, you take care. Everybody stay safe.
thank you.
Take care, you
You
too.
Bye-bye.
So-
Bye.
So Nancy, motion to adjourn?
Uh,
Oh, I didn't want you to hang up before we did that, so.
Yeah. Okay, so, a motion to adjourn, please, Drew?
Yep. Motion to adjourn.
Okay. I second it if that
Okay.
makes any sense, and so we're adjourned. Thank you. Thanks, everybody.
Thank you, everyone.
Talk to you soon.
Bye-bye.
Bye-bye.